you're looking to buy an investment property but worried about how you're going to qualify income-wise, or you're self-employed and worried how it will look for your taxes, let's talk about a DSCR loan. DSCR stands for Debt Service Coverage Ratio. Say that 5 times fast. Basically what a DSCR loan is it's a loan specifically for investment properties, and we do not look at any income. We do not look at debt to income ratios. We are only looking at how much can the property rent for versus how much the new mortgage will be. So as an easy example, let's say the property could rent for $2,500 a month and your projected mortgage is $2,500 a month. You've got a break even or 1.0 ratio for a DSCR loan. Now let's say that property can rent for $2,600 a month and your mortgage is $2,500 a month. You've now got positive cash flow and you're above a 1.0 ratio. However, let's say that property can only rent for $2,000 a month and your mortgage is $2,500 a month. You've got negative cash flow, so you've got below a 1.0 ratio. Those ratios are really important because it factors into what the pricing will be for the interest rates for a DSCR loan and what your down payment may have to be. So again, the benefits of a DSCR loan are the big pieces we don't have to collect. We don't have to verify your income. We don't even have to know if you are employed technically, and we don't have to look at your tax returns at all. Really what we're going to be gathering is bank statements to show that you have enough in assets to put down a down payment and how much you may have in reserves. And we're obviously going to be looking at an appraisal because that's going to tell us how much that property is projected for in rental, which determines your DSCR ratio. To be able to qualify, you will need good credit. It is typically at least a 660 and above. Again, pricing will always get better on interest rates the better your credit is, and that can also determine how much you have to bring as a minimum down payment. Some go as low as 15%. It is rare. You have to have optimal credit and a lot of assets. But some programs we have do go as low as 15% down. The majority will be 20 to 25% down. It's pretty standard. If you've ever looked into conventional investment properties, those usually require 20% down as well. So you will need good credit. You will need cash on hand, verifiable in the bank, not in a shoebox, not under a mattress, not coming from Lord knows where, verifiable funds. Money is key when it comes to a DSCR loan. How do you get started if you want to know if a DSCR loan is an option for you? Well, first, you want to talk to a lender like myself. We do have quite a few DSCR products at my current company, and I'm able to service North Carolina and South Carolina, and then we have other LOs in the company that can service many other states. So you don't even have to be in South Carolina for me to help you. What we'll do is we will pre-approve you base. We'll look at your credit and look at your assets to get started. And then once you're ready, you'll start looking at properties with your realtor. Your realtor will have to be an integral part of this, of running comps to see what that rent could be. Because from the get-go, we want to at least think it's going to be a 1-to-1 or above ratio. Or if it's not, we need to prepare for what that down payment may need to be. Then you could put in an offer, you could go under contract, and then we take over that loan and continue to process it, and we get the appraisal. And that's what gives us our final calculation for that ratio to, again, set what your down payment will have to be, what your closing costs will have to be, what your interest rate will have to be. And then you close on the loan, and it's now your investment property. You can renovate it as you need to, start renting it out, however you want to use it. 2 other questions I get quite a bit about DSCR loans is, what if I want to use it as a short-term rental, and what if I haven't been an investor before? So certain investors for DSCR loans will allow you, knowing that you're going to use it as short-term rental, and that's also part of that appraisal as to what it might generate short-term rental-wise. So it depends on investor to investor, and we have to double-check that for you. The other one is, what if I haven't invested before? Many of our DSCR products do allow you to be a first-time investor, and you may have to bring a little bit bigger of a down payment. Some will require a minimum of 20% down, some may require 25% down, or they may require a higher amount of reserves in your accounts. So you don't have to have had previous investment experience, which is great. That's a change for a lot of DSCR loans in the last couple of years that helps a lot more people be able to utilize them. Another good piece about a DSCR loan, especially for our investors, they're always wanting to know, can I close this in my LLC or S Corp for tax benefits? And yes, you certainly can. You can close a DSCR loan in an LLC or an S Corp, so you don't have to move it into that after closing and pay fees and taxes. So if you want to know if you can qualify for a DSCR loan and how to get started, what the cost might be for you, reach out. You can message me, you can email me, you can reach out, and we will get you started.